All right. Hello, everyone. This is Joe from Investment Diary. So welcome to our second interview sharing session. So today, very thank you for you guys who attend the live session. If you have friends who can't attend this session today, don't worry, we have recording as usual. So we'll later upload to our joeharmonica.com/wealth platform if you want to attend or rewatch this webinar later on. So today, we have our very special guest called Han Yang. Han Yang is one of my best friends who I have known for a very long time, right? So we've known each other since age of 7. So right now we have known each other close to 18 years, right? So yeah, he's one of the best guy, one of the best, I would say, model among our clique since young, all right? So without further ado, let's welcome Han Yang.
Hey, hi guys, I'm Han Yang. So actually very grateful that, as Joe mentioned just now, we have been friends since primary school, and then very grateful that we are still, able to have this connection even after all these years, right? And then very happy to see him actually building up this community as well to, help more people, whether be it investing or, just some sharing different perspectives of different lives, right? And then, yeah, so happy to be here today and hopefully can share something insightful to all of you. Yep.
Absolutely. So before we start the session, right, Hanya, I just want to give a very quick disclaimer to everyone attend or everyone watching this video, right? So both of us are untrained financial professionals. So today, this interview session is purely just sharing of what we have experienced throughout our not so long, right? Like 20 plus years of life and less than 5 years of working experience. So we may be wrong, but whatever we share is what we see during the past, say, 2 to 3 years, right? And yeah, so since Han Yang has introduced, I will probably introduce myself again. For those who are new today, my name is Joe. I'm a chemistry trained background, so I founded this investment diary community since the beginning, the mid of last year, right? So it's a Telegram platform where I share all my investment journey, my investment diary, what I learn and what I find in terms of stock market opportunities, right? So if you haven't joined later, please join our Telegram group, which I will post the link here later. All right. So yeah, I think we can start off with some basic questions, right, Han Yang? So just to get both of us warm up a bit and just to let the audience warm up a bit, right? So we will probably start with the very most basic question. Can you just share your little background, like how are you trained? What are you work? What do you work as, and why did you jump into this industry now?
Yeah, definitely. So a little bit of disclaimer for myself as well. I might be even newer in the, if you say US market, I might be even newer in the US market than you guys, right? So I think for today, let's just keep open mind and let's try to take in whatever we can have feedback from you guys as well, and then let's try to work from there. So a little bit of my background, I actually during my uni time, what I took was actually international business and marketing. So it was a business degree, and then currently I'm working as a marketplace executive in Zalora. So if you guys don't know Zalora, it's one of the e-commerce fashion platforms in Southeast Asia. So what I do currently mainly is more on the BD side of things. So basically, onboarding new clients, new sellers into our marketplace. And then from there, we explore more opportunities. And also a little bit on the relationship management part. So meaning whenever, sellers have any issues on their websites, I mean, on Zalora, then they will come to us and we will try to fix it for them. So basically, this is what I do now. And I was also a former SAP analyst at Deloitte. So that was, I didn't really expect myself being able to jump into any software industry, but that was exactly what I did during, I think, 2019 to early 2020. So that's what I did. I'm an SAP analyst. So basically, SAP analyst, what I did there was more to the software side of things. So meaning whenever clients, they have any requirements that they need on SAP software and any customizations that they would need, I will be the one that will be, executing that to meet their requirements. And then also, we do also, join in terms of, companies when they want to, newly launch SAP for their company. So that's where we jump in as well. So we serve as consultants for those clients, right? So whenever they want to launch something, they will have their requirements on what they want to use on the software and stuff like that. So we need to gather all those requirements and then have it, set up in a pipeline, something like that, and we test out this different scenarios for them before they actually went, go live on those platforms. So that's pretty much it. Yep.
Oh, okay. SAP. Can you explain a little bit about SAP, bro? I'm a bit noob about SAP because I'm in a transition. I'm in a situation where I'm in a career transition. So when I'm searching for job, right, I realized a lot of big pharma actually require this skill set called SAP. So what actually is SAP and what do you do with SAP? So how come so many large companies actually require this software for their purpose?
Yeah. Actually, SAP, if you want to understand it as it's simple as let me take another one. If you guys know Palantir here, Palantir we all know is like a data company.
Palantir.
So, well, it's top conviction here. Yeah, Palantir we see it as a data company, right? But you can see SAP as like a simple or beginner pack for Palantir, something like that. So meaning in short, it's like a data software as well, where you store all the company or corporate data into SAP system, and you have all those business data relevant to all different business functions, right? Consolidated into one system. So whenever you want to retrieve any data or you want to do some analysis on it, so it's more real time and it's more relevant to what you are doing right now. So you don't need to go back and check on a lot of other data and stuff. So it's I would say a lot of big companies, they are using SAP as their data kind of data storage kind of platform. And then so it's basically used by a lot of manufacturing firms, like what you said, pharma firms and automobile firms. So because they have a lot of different data, right? Be it the sales portion of data, and then when they do a lot of hiring for payroll data, and then perhaps for logistics data, things like that. So they all consolidate into SAP. So that's why it's like becoming more and more relevant, I think, these days, because a lot of companies, they are actually using. We know the data is new gold, right? So pretty much data is flowing in every day for different companies. So that's why they are actually building up and want to have a more stable base on the data. So that's where they will pull in software for different softwares like Oracle and also SAP, because as you know, like Oracle is also one of the ERP software in the market.
So this kind of software is called ERP, right? What does it stand for?
It actually stands for Enterprise Resource Planning. So yeah, so you can understand it is like you take those data and you can go get those data. You have some planning on that data, and then you come up with your own plans and then you execute it, something like that.
Okay. So SAP is one of the software and one of the company. It's by Germany, is it?
Yeah, it's one of the biggest ERP software. Okay. And yeah, because I think for software, the most common ones nowadays is like ERP software and CRM software. So ERP stands for Enterprise Resource Planning. It's where you link all different business functions together. And then we have another branch, which is CRM software, right? Customer Relationship Management software. So that one is more focused on customer relationship only. So we have Salesforce as the biggest market player in the market. Yeah.
So if you compare ERP and CRM, right, are they comparable or both of them are equally important for big organization?
From my experience, I would say pretty much it's equally relevant depending on what companies, what type of companies you are, right? What industry you are in, then you might need different kind of software. So like I said just now, ERP is mostly for manufacturing companies. Manufacturing companies, food companies, something like that. And then CRM is more like perhaps for companies that provide services where they need to record all those customer data and stuff. So they will have that in their CRM. Yep.
Okay, but their functions are quite similar. One is more on stock check, manufacturing. The other is on customer kind of tagging. So you tag different customer needs, different customer usage.
Yeah, but both on gathering all those data and have them consolidated into one single software platform. Yeah.
Sounds very much like Palantir, bro. So Palantir fits into which direction?
I think for Palantir, it's a little bit different.
Oh.
Sorry. For companies like SAP, right, we use past data most of the time to actually do some kind of analysis, and from there we can decide on how we are going to execute business plans, right? But then for Palantir, it's sort of finding that relationship between the data that you have currently and then building a model to foresee the future kind of thing. So I would say it's more AI related for Palantir and a lot more opportunities there, I would say.
So platform-wise, the concept is similar, but Palantir incorporates in AI and model and prediction to make something more rigorous. Okay.
Correct.
Thanks for adding to my conviction again, bro. All right. So regarding on SAP, right? You mentioned that is that your first job after you finish your business studies?
Actually, no. I actually did property management as well. So it's like property management, then to SAP, and then into e-commerce. Yeah, but not much to mention about the property management part of things. So yeah.
Understand. But how you seems to be transitioning your career quite a bit, from business, then property, okay, maybe related. So what makes you jump to SAP, then what makes you jump from SAP to marketplace executive now?
I think as for SAP, like I said, I didn't actually expect myself to be in the software industry, right?
Yeah.
That's because at that time Deloitte was actually recruiting people for their management associate program, and I thought of like it's a good chance, right, to get into big companies like Deloitte and stuff. But unfortunately, that role itself is more related to software part of things. So I hesitated a little bit, but then eventually I wanted to give it a try, right? So to see how maybe I can actually find interest in software. So that's why I tried to jump into it. But eventually, after like 1.5 years there, so it doesn't seem like I'm coping. I'm like I'm doing good there. So it's
not your kind of tea.
Yeah, it's more of like like I mentioned just now, SAP software, you need to deal with a lot of things just in the software itself, be it customization or bug fixes and stuff. So you are, I would say, restrained into the software portion, and then everything that you do on a day-to-day basis is more or less related to just the software itself. So you don't get to be in part of the business side, business decision side of things. So whenever clients, when they have any issues, they will already come with their requirements, and then you will need to provide them a solution to their requirements, and you don't necessarily know like why are they coming with those plans and why they need all those requirements. So it's kind of like you are constrained into the software portion of part of things, and you just do some sort of customization, different bug fixes and stuff like that. So that's, and another thing is not my cup of tea. And eventually I thought, I said to myself like, no lah, I want to jump to another industry where I can explore more side of things in terms of business and stuff. So that's where I tried to, and during the COVID period I did a lot of thinking as well. And I made that decision to actually jump out of SAP and then go into the things that I'm doing now, which is e-commerce, right? And then I think for e-commerce right now, from what I've experienced now, right, it's like 4 or 5 months since I've been in Zalora. So the biggest difference that I see there is that I get to, take part in a lot of business decision making, and then there's more room for me to make my own planning and stuff. So, and I get to meet different kind of people every day. So it's like I mentioned just now, I'm in the onboarding team as well. So whenever we have new clients, we need to really negotiate the terms with them, things like that. We have suppliers from different regions of the world, right? We have from Europe, from India, whatsoever, and then we need to really have those terms negotiated with them. So it's more of like a more vibrant, I would say. The things that I have been exposed to is much more than what I did when I was in Deloitte during my time as an SAP analyst, right? So yeah, that's the whole transition there. I think currently so far so good. Yeah.
This is a very powerful sharing, bro. As you know that I'm currently in a career transition. I totally can relate what you mentioned, right? Like the parameters you see, no matter how hard you work, right, you are still within this kind of, I would say, this kind of circle. You can't get any exposure to things like business side or something for you to grow beyond what you are doing in terms of technical part. So actually it's very interesting because coming from a technical background, I'm actually considering jumping to data is goal side or even the business development kind of direction. This certainly helps me to think more during this kind of transition period for me, right? So guys,
I think it's important because I don't want to stay comfortable and continue doing stuff that I don't really like. I don't want to waste so much time on that, right? I want to do something that I really like and would help me, would help push me to grow and things like that. So yeah, no point staying in a career where you have no motivation on, right? So yeah, that's how I thought.
Absolutely.
That time.
Absolutely, bro. But you transition very well. Like you figure out that, oh, this doesn't fit you very well, then you just cut loss and jump and move on.
Yeah, that's what you need to do, right? Like I said, no point wasting your time. And I always wanted to try BD kind of work. That was like my first choice when I first graduated. When I applied for jobs, my first search term will be BD, business development. And then so that's the story. And then from there I somehow get to be involved in some part of the business development part of things. So yeah, I think pretty much related to what I'm interested in for now. Yeah.
Okay, that's very good. That's very powerful. Guys, how many of you think it's powerful, right? Type in the chat powerful so we know that this sharing is useful for you. And you have any questions, right? You can also type into the chat room. So we will cover I will go through the flow of my interview session. So if you have any questions, you can type in the chat room and we'll cover them later during the end of the session, right? All right. So, okay, SAP to e-commerce. I'm just a bit curious, right, bro? Coming from a software or technical kind of role, does it actually helps you to transition into e-commerce? Because e-commerce is also, on digital kind of platform. Does it value add you in terms of how you view things or your experience and your, I don't know, technical kind of knowledge?
I would say 50-50, right? Because what it does help with is that you kind of know all those jargons where all the software developers or people like that, the terms that they are using, right? So it kind of help in terms of that, and you kind of know like what they are trying to do. Because I think for software industry, they follow certain patterns when they try to launch something, right? So they will go through the requirement gathering part of things, and then they go through the testing cycle, and then they go live for each different project for different companies. So I think the point where it comes to help is like I get to know like what they are doing, what the developers are doing. If they wanted to launch something new, right? Or let's say on Zalora platform, they want to launch some new features, then I would know what they are trying to do. I think in terms of that, I would say it's helpful, but not that much, because for me myself, it pretty much revolves around more to the business side of things. So I'm not currently engaged so much anymore to the software part of things. Yeah, but definitely it helps. Yep.
Okay. That's good to know. So, all right, let's jump deeper now into business and investing, since we are on this business kind of topic already. So, coming from a business background, okay, maybe you are not so business from the start, right? You are like me. We are from a science stream. So, jumping into business, tertiary studies, when did you actually start to pick up investing, or is it during your time of your business education? Does it actually introduce you into the investing world? How does it start off?
Yeah, I mean, for business studies, right? For business degrees, you kind of will get some info on the stock market, the economy, because we study economics and stuff. So you will know how the stock market works, but not really into. I mean, it stops there, right? So you don't go further into like how do you invest, how do you do financing, how do you grow your wealth or accumulate more wealth, right? So not so much on that. But then how I started was, I think was back in 2017 where I
Wow,
opened
that's
my
very early.
first trading account, because that time one of the stock gurus in Malaysia, they went to our campus and gave us this small talk on what is investing and what is the stock market, something like that. And then for me that time, after hearing what he said, for me investing is just another tool for me to make more money, and yeah, nothing more than that, right? And then I think, yeah, so that's how I get started in terms of investing. And then if you mention like how business relates to investing and how I see it, whether it helps me on the way, I would say definitely, because same thing, right? You get to know all those jargons when you study, accounting, finance, economics, and stuff. But the thing that really excites me is when you get to connect all the dots together. So the things that you study in business school, and where you really can apply those scenarios into what you are looking at the market right now. So it could be something as simple as different business models, and um, let's just give an example, maybe, because don't know if the people here are aware or familiar with the glove sector in Malaysia. So it's been really hot last year, right? So we have the few big companies who are selling gloves, and they are making good money. So from there, there's actually two different business models. One of them is called OEM. One of them is called OBM. So OEM stands for Original Equipment Manufacturer. OBM stands for Original Brand Manufacturer, something like that. So for OEM, you manufacture the products, and then you have it sent or have it sold to retailers, and from there they will do their own branding, and then the stock will go out, right? But for OBM, you do your own manufacturing, and then you brand you make it your brand. So from there we can see different how it relates to the end result, right? Is that for OEM you get lower profit margins,
Right.
and then for OBM, because you are manufacturing itself from upstream to downstream, you are involved in the whole process yourself. So you get to have higher profit margins, things like that. So it relates a lot into in the business world and what we see now. So it's pretty interesting when you get to connect all the dots together, and from there you see, oh, this is why this is happening, something like that. Yeah, that's what really interesting.
Okay. Wow. So speaking of glove, right? Did you invest yourself in Malaysia glove companies last year? Did you make a fortune from that?
Yeah, I did, but then not a fortune, but it's some good return there. Yeah, but if you guys don't know, it's the hype is really over already, and then we kind of see like downtrend non-stop for the glove sectors, right? Yeah, but then I think this is why we need to really time the market as well, and never go against the market, right? So whenever the market gives you a sign, just follow, and don't
Absolutely.
don't go opposite the way. Yeah.
Absolutely. Trend is your friend, people. So don't go opposite the trend, right? So if you see a stock is going uptrend for like 45 degrees, you don't go and short it and wait for it to drop, right? You wait for a downtrend to see whether you want to enter or you want to short on your side, right? So always remember trend, make sure trend is on your side. Right? Trend is where the big money flow is going. You don't really want to, travel on the opposite direction. So you mentioned on glove sectors in Malaysia. So do you start your investing journey from Malaysia stock market?
Yeah, even until now, I'm still, most of my portfolio is still in the Malaysia market. Yeah, but I'm trying to, diversify a little bit as well. So that's why I'm starting to pick up on US stocks as well. Yeah, but starting from 2017, yeah, it's more or less just the Malaysia market, and I've started, I think, just last year, where I start looking at US companies, try to do some analysis, try to read some reports and things like that to see how things work in US, because I'm more familiar with the Malaysia market. Yeah.
Understand. Bro, I want to share with you. I'm actually a bit traumatized by Malaysia market. I'm not sure I told you this story before. So during my uni times, right, year 4, I actually took one module called investment. Right? The module itself is called investment. So before you take that, you need, prerequisite, you take business finance, things like that, which I passed. Then I take that just for interest, because I have one thing called the SU, which means that I can just anyhow do exam as long as I pass, then can already. Yeah. So during that time, we split into group, right? So we do virtual investing. Then interestingly, within my group, all of them are Malaysian. So it'd be like, hey, since we are Malaysian, let's do Malaysia stocks, right? That was in 2018. I still remember 2018. If you remember 2018, year end is quite bad. It's downtrend all the way for US. So yeah, we are the only group who do solely on Malaysia stocks, bro. So we pick stocks from Malaysia, we invest, we manage portfolio size, everything like that. Then, after we do that, US-China trade war, then everything comes smashing down. US smashed down, everything smashed down. Then I remember US is down 10%, right? Malaysia stock, everything down more than 10%, bro. Then after that, I'm very traumatized by Malaysia stock. Then when we see US stock recover, Malaysia stock is still there. It doesn't move at all. Then we were like, oh my God, everyone is recovering from their loss already, but our loss is still there. Then after I graduate from that module, I don't touch Malaysia stock at all anymore until now. So maybe can you tell me some difference between, based on your experience, what are the difference you see from Malaysian stock and how does it compare to US stock? What is the biggest difference you see?
I mean, for US is the biggest market in the world, right? Biggest stock market is there. The biggest fund is there. The biggest, everything is the biggest. Biggest for everything is there. So more money flowing into the market, meaning there would be, to me there would be some stabilization factor as well. But let's say for emerging markets like Malaysia, like Vietnam, or the Southeast Asia region, even for Singapore, right? There might be lesser funds and lesser, I would say so that's why it's more volatile in a sense. And then another thing about I totally agree with you when you say you're traumatized by the Malaysian market, right? Because for Malaysian market, the bad thing about it is it's highly, political related.
Yes.
A lot of the companies are, politically related, and then that's where when you see now, unfortunately, we are having, political instability, and then that's why the market doesn't like uncertainties, right? So that's why we are not seeing money flowing into the market. And then as you can see, I guess perhaps for the last 2 weeks, money has been flowing out of Malaysia each and every day. So we are not seeing them coming back until, I would say, when political is more stable here. The politics are more stable here. So that's one thing. But having said that, I don't think like there's totally no investment opportunities here in Malaysia, right? Like I said, we have the biggest glove manufacturers in the world here in Malaysia.
Yes.
And if you had taken that opportunity to invest in them, last year, it would make you a fortune, right? And then we have some other companies like we are doing good in the furniture industry as well. Like it's one of the biggest in the world, maybe top 5 furniture export countries. right? So there are certain industries that we are doing good, and then even for technology sector, right? We have companies who do, but they are technology kind of level is still not that advanced. So you might see them just doing more downstream part of things. So manufacturing for all those big companies that actually uses all these technology products, right? But then I still think there's investment opportunities here in Malaysia. It's just that you need to be really careful on what you do,
Yes.
and yeah, try to go for the more stable kind of companies. And one of the biggest difference for Malaysia and US market is the way they actually value the stocks. So for Malaysia, I think it's because of for Malaysia companies, they don't really expand their business to like worldwide business, right? So they might focus just on a region itself, not like companies like Apple, Netflix, they do worldwide business. So I think that's why investors are giving higher values to US market as well, because it's really hard for me, because when I see Malaysia stocks, whenever Malaysia's companies are losing money, right, they normally won't have high valuations. So it's when people try to start to see firms making money. I mean, for Malaysia companies, when they when they start to see them making money, then that's the time where they will put money into companies like that. But then if you say US companies, we are seeing like a lot of companies, they are new companies and they are still making losses. But then the market is giving them those high values. So I think one of the main differentiation here is that they are doing multinational business compared to Malaysia, right? So that's why investors are giving them those high values. Yeah, so that's the main difference that I see now in both markets.
Understand. Absolutely. I totally agree with you on the valuation.
Yeah.
Right now, we are seeing a very
So it's quite
overhyped valuation for US stocks.
it's quite mind-blowing for me as well to see high valuations for companies like even like last year when I see Tesla, I think it's like crazy, right? Thousand something of PE, things like that. So yeah.
So is it still a culture shock for you, or have you tried to accept this fact and try to started to put some money to invest in it?
Yeah, I tried to put I think because of them being the biggest market, there's some sort of it's okay for them to be priced higher a little bit compared to emerging markets. But then I'm still very cautious. So I put my money in really companies that I have conviction on, and then like really companies that are doing well. I don't really go into like new companies they are going for, let's say genomics, those kind of stuff, right? For me, genomics, there's still a long way to go. And even after, when you come up with all those products and things like that, even after doing all those research, you already need so much money when you are doing the research. And when your products come through, you face regulations issues. So I don't see like a very clear path yet. So that's why I'm trying to take all the risks off, and then I'm only investing in companies that are more stable, be it like Apple, TSM, things like that. That would be what I'm looking at, for now.
Okay. Before we jump into valuation and companies growth, I want to ask you two very important questions. Fundamentals versus technical and value versus growth. Which one do you weigh more?
So first one is what? Fundamental vs.
Fundamentals and technicals, and value and growth.
I would say maybe if you ask me this question in 2018, 2019, I would say I'm definitely a fundamental guy, fundamental investor. But then since 2019 and 2020, we've been through all those up and down. So I'm trying to see technical as a more important indicator for me to enter the market. But of course, I would still look at the fundamentals of the companies, right? And then if I think like this company is worth my money to invest, then I would go for technicals to actually find an entry kind of point for me to enter the market. So I think I would say it's both important,
Yes.
and I would say even technical is more important, because like when you find good companies, but then there's like little volatility or little movement in the stock, right? Because the main reason that we wanted to invest is to make money. So like I said just now, don't go opposite. Don't try to work opposite with the market trend. So just
Yes.
follow the trend, and that's where technical analysis kind of comes in. So you get to shorten the time of waiting and stuff like that, and you really time the market better. Yeah.
Okay. Yeah. So I do agree with you. Personally, I do both fundamentals and technicals, but like you mentioned, fundamentals is for me to look in a longer term kind of perspective to see whether the company is really stable over the past, say 3 years or 5 years, if they have that long kind of history. So at least I know that, this company is legit, they are making money, they are trying to cut their loss, they have low debt ratio, this kind of stuff. Then technicals is really more of a short term and immediate action before you take action, right? Because if you see a good company at all times high, you don't necessarily want to chase the high. You want to use more technical indications, use more support resistant kind of line to judge whether this price is whether entering this price now will actually increase your win rate in the long run. That's how I feel. Yeah.
And I think your second question was on
Value versus growth.
value and growth, right? So me myself 50-50 as well. 50% for value and then 50% for growth, right? So for growth, it's definitely a very important factor for me, because without growth, there's no point investing in the company. So growth is definitely one thing that I will look out for when I put money into any companies, right? But then also what I think very importantly, your growth must be able, your growth percentages or whatsoever must be able to justify the value that you are having right now. If you don't, then there's eventually one point of time where the market will try to push back and find that balance between value and growth for this company, right? And that's where you will see if like you are with good growth, but then you are not making any money, and if your growth starts to decrease a little bit, that's where the market will try to find that balance back, and then that's where you can see the drop there.
Absolutely agree. Yeah. So for value or growth, actually, I'm trying to ask whether you are more into value kind of stock. So you look at fundamentals, and when the price really comes down hard, right, you fetch the low, or whether growth is more like you see company like perhaps Shopee shooting up and up, higher and higher. You don't really see a dip. So do you see yourself as more catching the dip kind, or do you see yourself higher can go higher kind of investor?
I would say I'm more of like a catch the dip guy. But for me myself, I don't really plan so much on like which companies what I want to do, right? It's more of like a portfolio allocation for me. So for me, because I'm cautious about the US market now. So what I do now, if I were to invest in the market right now, I would put probably 60 to 70% of my allocation into value stocks, right? So let's say in case if there's a downfall, at least there's still value in those stocks, and I will just need to hold on to them if I'm really confident in that company, and then perhaps put 20 to 30% of my fund into growth stocks, because for me growth companies are something really powerful. They will grow like super high in valuation for the years to come, and when business starts to come in, stuff like that, then they will there will even be higher valuations for them. So yeah, that's my strategy. So putting more allocation into value stocks and then less allocation to the growth stocks. That would be my plan. Yeah. So when whether be it timing the market, let's say catching the dip, or chasing high, that really doesn't matter as much for me. As you have
totally understand.
Yeah, when you have that strategy already, then you can kind of limit your risk at the same time. Yeah.
Yes, this is very powerful, bro. So investment portfolio managing know how much you want to allocate, find your top commission company, and you allocate properly. And
Definitely.
it's definitely one kind of risk management, because this is one of the topic that one of our audience requested for, right? Risk management. So how do you manage your risk? You need to build your own investment thesis, right? You want to know why you want to invest in this company. Then how much of your portfolio do you want to allocate into a value kind of stocks? How much of your allocation you want to put in growth? So you roughly know, let's say if market dips, what is your cut loss strategy, or do you add more? Things like that. Yeah. So there's one thing I want to add, bro. You put 60-70 to value, 20-30 to growth. So how much is your expected return? And do you have extra cash to catch any other opportunities?
Yeah, if that's okay, if you take into consideration the cash on hand, then I would say I would definitely at all times leave like at least 10 to 20% of cash
20%. Okay.
on hand,
That's
right?
a very healthy ratio.
And then the rest of the ratios I will divide it into value stocks and growth stocks. Yeah.
Right.
Yeah, and something something that I want to add on also is like it's very important. First, portfolio allocation, and second, you need to really have a strategy before you even enter the market, right? Before you even buy in any stocks or sell any stocks, right? You need to have that strategy. So let's say you are aiming for this stock for long-term investing, then don't go and look at the price movement every day, right? Because it's going to be long-term for you. So that's what, because there's a lot of noises in the market, right? So one thing that you can do is that you need to really set up your strategy. If this is a long-term play, then you go for long-term, right? Then you just clear off all those noises in the market. And then if it's like a short-term trade, then whenever you need to have a plan lah. Whenever it hits like your cut loss point or whatever, just follow your plan, right? Don't just, because if when you don't have a strategy before you enter the market, then you will get affected by all those emotions.
Yes.
When you okay, let's say you buy in this company today and it's for a long-term kind of play, but then you don't know the strategy on like where are you going to take profit or where are you going to cut loss, right? Then if you see one day like stock going down for like 10%, you will be panicking, right? But then in the beginning you wanted it for a long-term play, so don't have that kind of crash in those mindsets. Yeah,
Absolutely. So I think whatever we shared for the past 2 to 3 minutes, right, is a very good reminder for me, because personally, right, my hand is very itchy, bro. So every time when I have cash reserves of more than 10%, right, when I see opportunities, I will shoot. Especially for the past few days when we see market is going down, right, I've been shooting almost every day, bro. So right now my cash is really close to less than 5%. So yeah, then I realized, I can't be shooting this every day. Market might keep on going falling, and there will be a point of time where the real opportunity comes there. I don't really have enough cash to catch. Yeah, so that is reminder number one for me. And second is, like as you mentioned, if you have a long-term strategy, you don't really need to look at the chart every day, right? For me, I plan my trade short-term, mid-term, and long-term. But I do look at market day to day. But very important, guys, is to know that if you see market noise, right, try to look at a longer time of horizon. Then you'll see that, in the long run, this company is going in the uptrend. So when there's a dip and the fundamental doesn't change that much, it's actually a good opportunity for you to enter, right? So yeah, don't look at the market noise, because market go up and down all the time. It's not a one-way straight kind of highway. Okay, very good sharing. So yeah, I want to drill you a bit on your business knowledge now. So we talk a bit about valuations, right? With your business kind of background, or with your experience, what are the valuations you actually look at, and what are the most important, I would say top 3 or 5 valuations you will consider before you actually add this company into your watch list?
Okay, for me personally, I look for companies that are I try to look for companies that are already making money. So because I think for a business business person point of view, it's like doing business, your ultimate motive is to make money, right? The aim is to make money. So when I see companies not making money for all all those years, right, it's it doesn't really suit me lah. That kind of companies, right? So I don't really put if companies are not making money, I won't be putting a lot of. I don't have that confidence to put a lot of money into the company. And
so even if their revenue is increasing but earning is negative, you won't put. So that's your number one.
Then it depends. Then it depends, right? Whether if it's like the revenue is growing stably, and then you know their losses are slowing down and things like that. So that's where I would think it's some good companies that I can invest in. But then if like let's say the losses are bigger and bigger each and every year, so I don't think that's a good sign for me.
Understand.
Yeah.
Understand.
And then if you say valuation, for me the first thing I see would definitely be revenue growth, whether the revenue is growing. And then secondly, I think the profit margins, be it operating margins or net margins, because that kind of concludes how the company is doing, right? How efficient the company is doing the business. So 2 is profit margins. Any other ratios? I would say debt to equity ratio is also very important to me, and it depends also like if the company is in high debt and they are actually using that debt that they have to actually invest in research and development or having product development, that kind of stuff. So that's a good thing, right? But then if you are seeing company gathering funds, but then they are not actually using it in a good way, and then they are using it for like different just to set up new offices, things like that, for those fancy things, then I don't think it's a good thing. So it really depends on how they use the capital as well. I think I think that's pretty much it. As for valuation ratio, like dividend yield and things like that, I don't think it's that much relevant to the US market, because I guess most of the guys here are really more into the growth stocks, right? So I don't think dividend yield is something that is relevant to the US market. So that's why I'm not really particular about that as well. So I would say profit margin and the growth of the companies and debt to equity ratio. And definitely the return on equity, right?
Return on equity, yes.
Yeah, so that one is one kind of valuation ratio that I will look at as well. But in general, it really depends on what kind of industry that you are in, because for perhaps software companies, they would have definitely higher gross margins than the other manufacturing companies, things like that, right? So you need to think of how what are the ratios that you want to use for different companies as well. So you apply different scenarios or different valuations to different companies.
Okay, understand. I do agree on revenue growth, profit margin, debt. Personally, I will look at free cash flow also. So just to see whether their cash is healthy enough to cover in the case where things like COVID happens. Is their free cash flow enough to cover them for like 4 to 5 years at least? So when crisis hit, they won't be the one that will announce bankruptcy. Yeah. So can you quickly run through with me very briefly on your process of doing your due diligence on company research?
Actually,
maybe for Malaysia stock, if you are more familiar, I think the process should be similar, right?
I think I can talk about US stocks. It's okay. Because I'm not so familiar with whatever companies that are in the US market, right? Whenever I want to know more about that company, I will first go to their company website, also go to the investor relations page, right? And then go to the annual report, the latest annual report, and from there try to dive deep into it and see what they're doing, because they will have all those introductions, their services, their products, all those details are in the 10K, the annual report, right? So that's where I will first go in, and then from there, the second thing that comes that is really important is then the figures, right? The past figures. So I go first to the profit and loss statement, and then followed by the balance sheet and cash flow, right? And go through all those statements, and then from there, then I would know which type of valuation ratios or which type of ratios that I will be using to evaluate these kind of companies. For let's say software as a SaaS company, software as a service companies, then I will be using customer retention rate, the revenue growth rate, and then other rates. Then I will focus more on their margins, right? Gross profit margins. See whether it's they are efficient in what they do. And then for different companies, just apply them, to different industries. And then I guess then I would go into the the valuation of the companies. Meaning, for me myself, I use DCF model most of the time.
Wow. Okay.
Some
really
sort
value
of DCF
investing
model.
kind of people.
Yeah, but from there then you kind of know how much the company is valued at. So that's why it's pretty hard for me to evaluate those companies that are still loss making. And that's why I go for value companies and companies that are already making money and having free cash flow. Right? So that's why it's easier for me to actually do the evaluation as well.
DCF, bro. Wow. Nowadays, I don't see many people still do DCF, bro. So you have your own template of DCF?
Simple one. Not that accurate also, I would say. But at least I sort of like have a gauge on how it's worth, right? How much it's worth. Yeah. So
Okay.
I do have my own template, and then I just go. It's easy, right? You go to YouTube and you type DCF model or simple DCF model, you get all those different templates, and then from there you kind of improve on it, and then try to come up with like a simple one of yours. Then whenever you have companies that you are interested in, then you just put in those numbers, and then you get the value. Yeah.
Exactly. Yeah. DCF, for those who don't know, is called discounted cash flow model. Right? So what it does, you discount future, let's say 3 to 5 years or even longer term of the cash flow, and you discount back into present value and see whether how the company valuation today actually can worth, right? Depending on their future growth. So it's a very powerful tool for used mostly by value investing, but I think it's still relevant now also. But DCF I don't like is because they have this problem, bro. They have too many independent variables, so you can only be right to a certain extent. But I mean, for all valuation models, they have pros and cons.
There's definitely some limitations of it. And then you won't, if you are really a value investing kind of person, right? And then you use DCF model, then you would miss a lot of the growth stock last year or this year.
Exactly.
So that's the limitation, right? Because for value investor, you kind of see like, okay, this stock is like, perhaps if it's worth like $100 and now it's like 150 already. So you will really want to wait for that dip then around 100, and then you'll go into the market. But then you are already missing the whole trend there, and then it goes to like 200, and then you miss the whole thing. So that's the limitation.
Yeah. So personally, I use more of price ratio, right? PE, price to earning, price to book, PB, price to sales. Yeah, because I find that usually these three give me a higher kind of price target compared to DCF. DCF to me is a very base price. If it really hits DCF, it's really a value buy already for me. So I don't really do DCF. Yeah. So I'm not sure, do you know about this link called hypercharts? So I'm sharing now to this this Zoom chat, right? It's called hypercharts.com. So for people who want to do fundamentals but don't really want to spend so much due diligence, you are not as I would say diligent as Han Yang. Like person like me, I'm more lazy, but I want to know the fundamentals. So you can actually log into this hypercharts and you can type down the stock ticker, right? Let's say Apple, you can just type AAPL and they will show you the relevant fundamentals charts. So things like revenue growth, things like profit margin, and you can know which sector of their, let's say iPhone, iPad is actually making money. So if you're looking at companies like Facebook, just as Han Yang mentioned, like software service, they will usually look at customer retention, right? So hypercharts actually do that also. So if you type in Facebook, they will show you whether their customer retention is actually growing. Like Netflix, is their subscription number actually growing? So it really gives you a clearer idea on visualization. But of course, if you are more diligent and you really want to do the hard work, right? Do what that Han Yang mentioned. Go to their company website, look at the 10K, and look at their profits loss, P&L statement, balance sheet, income statement. That is the best way to do fundamentals, right? For me, I do that for certain companies, a lot all, because it's really rigorous, I would say, to cover a lot of companies with that.
Wow, this one is really a powerful tool. What do they base their data on? How do they get all those data? Is this like coming from other websites, they collected all the data and
Their
have it here?
data, from what I know, right, their data, they update every time after an earning release. So every time when you have an earning release, quarter release, they will update their profit and loss, what is their earnings, what is their current growth margin. Then I realized after 1 or 2 days, they will usually update to the website. It's quite accurate.
And one more thing, why I do like all those due diligence work, right? Because for me, if I want to be confident and have like, if you are a person with like 50K kind of capital, if I were to put like 20-30K into one company, then for me I will definitely need to do the due diligence work first.
Absolutely.
So that's where I will have that confidence and really put that money into. No point if I'm confident in the company, but then I'm just putting like 5,000 into it. It doesn't really, even if it's like making 100% returns, then you will be only making 5,000, right? So that's one of the reasons that why I go deep into the company as well, to give me more confidence, and then I will be more confident to put in more money to that particular stock. Yeah.
So guys, if you can summarize very quickly, right? First, you need to get rid of your emotions in your investing or stock market journey. Second, to invest in company that you can sleep well at night, right? Make sure you do your studies and have conviction on company. For me, it's like company like okay, I said this many times, but Apple is my top conviction company, right? So every time you ask me to close my eyes, I also can memorize why they are doing good. Yeah. So you need to build this kind of conviction. So even the company stock price fall, right? You will be still in peace, I would say, to hold the company stocks for a long run. Right.
Exactly.
Yeah. So okay. What platform are you using now, Anya?
I'm actually using Tiger Broker.
Tiger Broker.
And then recently I also opened up an account for Weibo.
Oh, Weibo also.
Yeah, because
use all this fancy kind of platform. Yeah.
Yeah, because I don't know why I have that impression or mindset that TD and IB is more, is harder to get, harder to register, things like that. I don't know why. And then so I go for more easier applications that I can register on. So I go for Tiger Broker. Tiger Broker is more for me to, my plan is to make it as like a long term in if any stocks that I would have in my portfolio for a long term, then I would go for Tiger Brokers. And if like it's a short term kind of trade, then I will go for Weibo, because Weibo, they don't actually charge any commissions on the trades. So I think that's you save some money there. But for long term, then I go for Tiger Brokers. It's like $199 for each transaction. So it's not that much. So I think for long term, kind of, if you want to do long term kind of play, then you can go for Tiger Brokers. And yeah, that's it.
Can you buy partial stock with Tiger Brokers? Let's say if Apple, I want to invest, but I only have 50 USD.
I don't think you can do that with either Tiger Brokers or what is it, Weibo. Yeah, you can only buy the whole stock. Yeah.
You like all these animal kind of brokers, Tiger,
Boo.
Yeah, but I do agree with you that TD and IB has a longer kind of process. So TD,
perhaps because of that,
I use 3 weeks. Yeah. But I heard Tiger has been gaining popularities in Asia. Weibo has been gaining popularities in US and Europe. Europe is still more on eToro, but very funny. All this new trading platform has been gaining a lot of attention from millennials.
I think for IB and TD, those kind of platforms, they are more, kind of formal, traditional kind of platforms, and they have all those, their system and everything is very, very complete already, I would say. It's very matured already, the whole thing. But for Tiger Brokers and Weibo, I don't exactly, go into Weibo and check for it yet. But then for Tiger Brokers, what they are doing now is like they kind of like they're trying to build sort of like a community kind of platform. So we can share a lot of even videos and your comments on the platform itself. So that's where I think it gained a lot of popularity in the retail, investing kind of world. Yeah.
So it's like social media tagged to trading platform.
Something like that. Yeah. You can share your trading ideas. You can share how much you gain, things like that. Yeah. You can share even your videos, YouTube videos, you can put it on there, things like that. Yeah.
Very similar to eToro concept, but I think Tiger has been gaining more popularity in terms of their ease of use and also security wise.
And in terms of what you can do on Tiger Brokers, right? It's pretty much the same as I think what you can get on IB or TD, right? You get to purchase IPO stocks, you get to trade after hours, pre-market hours, you get to do options. So everything I think pretty much the things that you can get on TD and IB, you can get it on Tiger or Weibo as well.
Okay. And do you see any cons or limitation so far?
I still see a lot of comments on either Facebook or social media saying like the platforms are not so stable. I mean, at least for Tiger, it's not that stable. So, when there's really huge volumes that day, then you might see some interference in the system. But then for me, myself, I don't see that as a issue. It never happened to me before. So I think it's just individual cases. But so overall, it's quite stable.
Okay. Then better than eToro then. If you know, right, eToro has been crashing for
really bad.
I think 2 days for last week. I don't know how people trade with eToro. Because I see one of my senior, he's actually one of the popular investor in eToro. So in eToro, you have this copy trade function, right? He's one of the most copied investor. So he has a pretty much big AUM there. Then I remember there was a day that the market fall very quickly. I think it was last Wednesday or Thursday. He tried to open trades, but he cannot open any trade. And he's like, wow, sia lah, he can't open any trade, then how? eToro also can't refund you also. Yeah, so brokerage, I feel, is a very important thing if you want to invest for long term.
Yeah. Luckily, you get out of eToro soon enough. But you are still having some of your portfolio there, right?
I still having, I would say, at least 30% of my portfolio there, because the price entry is too nice already. I don't think I can get it again, even if another market crash. So yeah, I'll just leave it there. And if eToro really going bankruptcy, there, I will try to take my money out.
I heard they are going IPO, right?
They're going IPO soon. Yeah, they're going IPO soon. So right now, money is still safe. So I'll just leave it there for the time being. Okay, so cool. Maybe can you share a bit on, if you are willing to share, what are the companies that are sitting in your watch list right now, or even your portfolio, and your targeted gains or returns in the, say, 3 to 5 years kind of horizon?
For me, myself, I don't really go for popular stocks, as in really popular stocks, because you might know, like, there's this saying, when everyone in the market knows something about it, then there's no value to that information, right? So that's why for now, I don't really get, I'm not involved yet in stocks like Tesla, that kind of really popular stocks. So what I'm trying to do, I mean, perhaps for this year, is try to, find other companies that are really, that people overlook, perhaps. That's how I would say. And then things like, for me, I've been in the software industry, so I know how powerful software tools are. So I would definitely be looking at software companies, SaaS companies, like Palantir, like CRM, other companies, right? Even like Cloudflare, Net, those kind of companies, CrowdStrike. And then this is one sector that I will be looking into for this year. And then I would also be looking into mining companies, because the electric car kind of trend will be it's already reality. It's not like a trend anymore. It's already reality. So from research, right? So in order to have all those vehicles built up, manufactured, then you need more components, more copper or anything, other components or other materials. Other what do you call that? I don't know. It's like sort of like copper, those
commodities,
tin,
metal kind of commodities.
Yeah, metal, those kind of commodities. So definitely one thing that I will be looking at as well. So specifically, there's one company I think that I will check is FCX, I think.
Freeport.
Freeport McMoran, if I'm not mistaken.
It has been gaining quite a bit of popularity for the past 2 months.
Yeah, but I think if it's going to do well, I mean, because the trend is coming already, and then you will only be manufacturing more cars, and you will only need more components like that, right?
Yes.
From
Yes.
the mining companies. So that's why I think if there's a huge fall or things like that happen, there might be a chance there, because everyone now is flocking into EV sector, right? But then what I'm trying to do here is like I'm trying to think of what
Take a
companies
step back. Yeah.
will benefit from the EV sector, and I don't really join the whole flow going into that. So I try to find another kind of stock that will also benefit. So that's where I'm coming from. SaaS companies, yeah, that's I think the main thing that I will look at lah. And
I like your
definitely
kind of approach. I really
technology companies are still a lot of them are still in my watch list. Definitely technology companies are something that we really need to put more focus on, and we can try to do some homework on all those tech stocks that you feel like you are confident in lah, or you like for say for me myself, I know like software is powerful, so that's why I go into software kind of companies to try to find good companies there and try to invest in them.
Understand. I really like your approach on how you take a step back and look at what are the companies that actually benefits in this macro trend, right? So things like, FCX, I think the first time I heard people pitching me about FCX is like 2 months ago. And when people pitch me, I'm like, copper, what can copper do, right? Then slowly I see the trend of EV there and start to realize, oh, okay, so this is how you look at things. So when people rush into one sector, you don't necessarily need to rush into that sector if you are late, right? So you can do like what Han Yang do, you take a step back and think, hey, if this sector is going good, what are the other sectors that can correlate and actually go well together with this kind of sector? So yeah, copper, as we mentioned, commodity and things that will be involved with EV or even things that can support green or renewable kind of energy, I think that will be something we can look into also. FCX is now sitting in my watch list, but I haven't added any position.
Yeah, but definitely, EV is something to stay for a very long time. And they can still continue to grow for years to come, right? So if you are a long-term holder, I don't think there's much of an issue there. Yeah.
Of course, EV, I would say for the next 5 or 10 years, I still see a lot of development. So for me personally, EV, I do only Tesla. I don't really touch other companies because, if you want to invest in the best. That's what I can say.
Bro, what's your point of view of China actually letting Tesla going into China and have those manufacturing facilities built up, right? Because what the market is saying now is like not talking anything bad about China, but then we know things, right? There must be some kind of technology kind of transfer there when they do the manufacturing in China. So what do you think about that, and like will it is it like a really huge concern for you?
Okay, good question, right? So actually when Tesla first joined China, that is also the first thing that came into my mind. I'm like, oh shit, why do you go into China out of all of the places? But then I think Elon Musk also considered that factor. I don't think he's that dumb in terms of technology lead, right? So the thing that brought into my conversation is that yes, for sure that technology transfer or even technology mimicking or whatever, that will definitely happen over time. But what Tesla is doing, if you realize, right, Tesla has been giving out their patents as open source also. As long as they have already, utilized that technology, they will release to the free market. So whether or not they are going into China, it's just a matter of time that other EV companies will also get a hand of what Tesla has developed. Just in a matter of time. Yeah. So even if they go into China, probably if there is really something happening there in the factory, maybe some other competitors can get the info quicker than other players. But I don't see a very big downside, because Elon Musk himself, he want to accelerate the EV market also. So when you release open source and you have the capabilities to scale or even innovate faster than people, right? You actually invite more competition and you accelerate the process of pushing EV and pushing autonomous vehicle. So definitely there is some downside, but I would say competition is good, or else, when the government steps in and say, hey, Tesla, you are doing monopoly thing, then I think Tesla is going to have a hard time. So I think it's a good play for Elon Musk trying to, hey, I have this technology I release to you also. Don't say I'm a monopoly and I'm still the market leader. I think it's a very smart play of Elon Musk, I would say.
Yeah, right. Yeah. The monopoly issue. Yeah, correct.
Yeah. So, okay. Since you mentioned a bit your portfolio on US, right? Maybe you didn't have so much portfolio on US stock yet, but can you share with us what are your biggest winner or losers and the lessons you gained from your experience, right? Be it US or Malaysia, I think what the lesson matters.
I think for me currently now, we are moving into a really, technology is starting to play really a big role in our world right now. So last year I've started to put in more capital into technology stocks, but that's in Malaysia. For US market, I think I joined, like I bought the first US stock this year only, so I don't have much comment on that. But then for Malaysia, I would say definitely technology is the one thing that you want to look into. And then for me myself, I've been investing into also fintech kind of industry, so payment companies, and then data companies, data storage companies, stuff like that, right? So those are really stocks that make me a good return for last year and this year. So for me myself, my play would still be for Malaysia, a lot of it will be more on technology companies, and then perhaps the other portion, then I will be looking at manufacturing companies, but also related to technology, like those companies that are coming out with automation for factories, things like that. And then also semiconductor companies. We have a lot of semiconductor related companies as well in Malaysia, so that's where I will be looking at as well. Same goes for US market, right? So there's this one company that I wanted to share as well. It's not traded in the US market, but then I think it's a good company to look out for as well. It's called SMIC. If you guys heard about it, Zhongxin Guoji.
Oh, it's the China TSM, right?
Yeah. So I have some of the research that I did here, right? So SMIC is like the biggest foundry company in China. So for Taiwan, you have TSM, right? And then you have, foundry related companies. Then for maybe US, you have Intel. Then you have other companies like what is it? Samsung, I think, is also doing that. And then you have like global foundries, so different kind of companies doing that, right? And then for me, right, because now they are already having issues where they are quite concerned. The market is quite concerned because all TSM is gaining a lot of portion in the market, right? It's like over 50% of market share is with TSM. So it's starting to be like half monopoly kind of status already. And then countries or companies, they want to rely that much on TSM. So that's why I think there will be, and with the shortage of chips that we are seeing right now, there certainly will be some outflow of those orders, right, out of TSM or Intel or Samsung, and going into companies like SMIC. From my research here, the technology that they are having now, I think they are only at 40 nanometers. So it's like really bad compared to TSM, those kind of companies. But like I said, for China, you really need to be careful of those Chinese companies, because they can really go really fast, right, if they want to. And with the manufacturing 2025 of China, they have plans to push all these technological improvements, right? So they definitely will put SMIC, the biggest company in China, into play, and they will try to push whatever they can into building and improving those nanometer kind of things to make it even down further to 10, then 5 eventually, right? And then management wise, I think the leader for SMIC currently has been in TSM and Samsung as well. And he himself he himself, I think it's a he himself have like 450 patents to himself.
Wow.
So this person has 450 patents. So that's why I think it's really crucial that this person is actually in SMIC right now. And I believe that in the future he will be able to, you know, push that through as well. And then other thing as well, I think let me check on the companies.
Wow, you really did a lot of research and studies on this company, bro.
Okay, we have a few companies in the market right now doing this kind of foundry things. Like we have UMC. UMC, I think, is a Taiwanese company as well. And then we have like Global Foundries. So they are all doing this. And from what I know, they have already, you know, given up on, you know, manufacturing chips that are under 10 nanometers.
Oh.
They have already given up because I think for efficiency or, you know, they can't really keep up with those and the expenses are just too high for them. So that's why they have already, you know, given up on their plans on chips that are below 10 nanometer. And then I think then the players left in the market is just, you know, those big players, and then for SMIC, and SMIC can definitely grow from there. So that's why I think it's also a good thing that you can look at SMIC as well. And if there's any, you know, pullbacks, then there might be certain chances of us entering as well. Yeah, so that's one company that I would be looking very closely as well. But it's listed on the Hong Kong Exchange.
HK.
Yep.
Yeah. So when you buy, you need to buy 100 lots of it. 100 units of that.
But
okay, let me just. Yeah.
Yeah.
Definitely, you were saying?
No, nothing.
Okay. I think we can jump into taking a look at some charts, right? Because you were mentioning SMIC that I actually opened my trading view to look at the chart already. So just before we look at the charts, right? If there is any questions from the audience, do type in the Zoom chat. So later we can cover in a quick Q&A session, or you have any stocks that you want us to analyze or the market trend, right? You can let us know also, or else we'll just go through quickly on the trading views and we'll just open whatever I have prepared here. Okay, so I'm sharing my trading view here. Hann, can you let me know if you are seeing the chart right now?
Yep.
Yes, right. Okay, so this one, SMIC, is exactly the company that Han just shared, right? So SMIC, as you can see, is listed on the Hong Kong Exchange. So just before Han mentioned about SMIC, I actually have exposure on SMIC during this bull run, right? So when people tell me about SMIC, I think it's around 30 something, so it's around here. So I actually traded very quickly to say close to 40, then I let it go. Then luckily I let it go.
Good.
There's a
good move.
there's a very high, very big pullback because I was just riding the wave. I didn't really plan to hold SMIC previously, but then it seems like after you mention all this research, right, I think it's worth looking back at SMIC again. The earnings itself has been quite good.
But in terms of valuation, I don't really know whether it's undervalued or whatsoever. But then something that we can start, you know, looking into as well on the valuations and stuff. I don't think the market will have, you know, cheap valuations for semiconductor related companies now. But eventually, if we see a downfall or anything, then it might be a chance. Yeah.
Absolutely. Something I don't really like about this chart, bro, is going up and down. It doesn't really
correct.
It doesn't really follow any of the EMAs.
There's no clear trend to it.
There's no clear trend. But if you look at RSI, probably you can catch something. See, RSI here is quite low, then going up. Then this one sort of rebound, EMA 100, not very strong. But yeah, I think this stock, I'm not too sure, but it might have correlation to the what do you call that? HK index? Is it HKI? HK or HSI?
HSI, Hang Seng.
So, yeah, probably,
but Hang Seng is...
Yeah, so Hang Seng coming down, just now SMIC.
Actually, I'm not so familiar. Is Hang Seng China or?
Hang Seng is SI. Hang Seng index is on Hong Kong Exchange.
Oh, Hong Kong, okay.
Hong Kong Exchange, yeah. Shanghai one, I'm not too sure though. Shanghai is TVC. Yeah, but anyway, HSI has been falling. Of course, I know that for my portfolio, Tencent has been falling. Meituan has been falling. So yeah, quite similar in terms of the M that you see falling. Yeah.
I think since the news of the stamp duty came out, then started to show some weakness there.
Exactly. So I think we were talking about VIX that day, right, bro? Did you actually enter to hedge your position?
No lah, I'm not actually that pro in using all those different tools yet. What I do know is that it's already at a support level, so high chances of it bouncing back, which means high volatility in the market. So that's why need to be very careful in this period of time on your portfolio. Anything can happen, right? Yeah.
So I think when we were talking, it was around here, right? Then I draw this
20 something. Yeah.
20 something. So after we talked, right? 2 days later, I actually bought. Then I waited for a few days. It touched here, then I sell already. Yeah, but I did for options. So yeah, something about VIX, right? You can realize it goes up very quickly in one day, and it comes down in a few days. So from another group, I actually learned this strategy. I'm not sure how well can it do. So you mentioned if you see that VIX actually spikes up, right? His strategy is not to buy low and sell high. His strategy is actually to short when VIX shoot up.
Yeah.
Because you have a higher chance of capturing your profit.
Yeah, one of the strategy, that's pretty much one of the strategies as well. It's pretty much good if you can minimize it a little bit, the graph. I think there's certain resistance level. I think it has been hitting that resistance level since you see. I mean, perhaps that 3 points. If you draw a downtrend line there, then perhaps you can see if it hits there, it might face resistance there lah. So if you buy a put on that, then should be fine as well. One of the strategies here.
Yeah, but VIX is a hedge kind of strategy lah. So except from cash, then if you want to hedge your position and gain more aggressively, you can do VIX, or else just focus on companies. VIX is like buying insurance. You can easily lose the money here.
Yep.
So okay, what's your thought on US, right, bro? US has been falling for the whole week, I would say.
Actually, for US market, I mainly only I don't even look at DJI and S&P 500 now. Not that much. I look at only Nasdaq index because
Nasdaq lao sai, bro.
The one that I'm researching on is Nasdaq companies, right? I would say now we are still, if you ask me, I would say the probability of it going down even more is higher, or at least it will start consolidating. And if we were to come back to go back to the uptrend, then I would say it needs to go above the 20 MA. The candles needs to go back to above 20 MA. That's where we can really confirm that's a really healthy and really strong sign of us going back into the market. But then for now, if you see at the 20 MA, it's downward pointing, right? So for me, high probability of it dropping even more, or at least consolidating. If we start, if we start to see some consolidation here, then I think for individual stocks that already fall 20-30% or even 30-40% from the high, right, then might be a good chance for you to enter the first batch into the stock, just to position a little bit.
Right. So for me myself, I see probably a short-term support here, close to EMA 100.
Yeah, 100 EMA is quite a strong support, I guess.
Yeah, if it still fall through, the last thing I will see is here. If it's fall through this level, this tree top here, then I think it's going to lao sai to 200 already. But I don't think it will happen because COVID is where COVID is here.
But I don't see it coming really. I mean, I don't see a huge downfall.
I don't see a huge downtrend. Yeah, so I think consolidation is still the most probable outcome here. Because even for ISI, even its downtrend, right, I think it's trying to come back up, but probably you need some more time for it to consolidate.
What the investors now are really concerned about is the 10-year bond yield, right? So I think that was
10-year.
one of the main reasons that caused the downfall in the market last week. But then since I think they already approved the 1.9 trillion stimulus package, right? So there's short term, there's still some support to the market lah. I don't think it will fall like really crazy.
The 10-year
TNX or something like that. If I remember correctly. TN, small n. Is it? Yeah,
yes.
10-year treasury.
Yep.
So it has shot up until like close to 1.5 something last week.
Yes. So for those who don't know, like bond price actually is a bit negative correlation to stock price movement, right? So maybe Hann, you want to share more? I think with your your jargon is maybe better than mine.
But I'm not really familiar with bonds as well. But the thing I know is that when bond yields go up, so be it funds or other investors, right, they will start to consider trying shifting a little bit of their funds into treasury
Yes.
yield bonds, because for treasury bonds it's risk free, right? So yeah, you will see some of the money. I'm talking about like big funds here, so they will try to plan a little bit on how they are going to allocate their funds, and then perhaps they will try to go into the bond market and purchase some as well, because the yield now is relatively high. So that's one main reason. I mean, one of the reasons it might be for the downfall that we are seeing in the stock market right now, because money is flowing out of the stock market.
Yes. Yeah. So I think the common way to understand this is that, recently we have been seeing a lot of banks trying to cut rate, right? So why do they cut rate? Is because they want to discourage you from storing your money into the bank, right? So if you don't put your money in the bank, what will you do? You'll try to spend, you'll try to put it in the stock market. So the rate actually matters. It's a very powerful tool by the government to control consumer spending kind of behavior. So if the rate of, let's say, a bond is high, meaning higher bond yield, right? Meaning that you don't need to expose yourself to so much risk, and you can already get a higher guaranteed return. So with that said, right, more money will flow into the risk-free kind of investment, which is bond. So yeah, money will be flowing from risk instruments like stocks, like options, like forex, back into the bond. That is what we are seeing now. So when more people buy into treasury bond, which is a risk-free bond, you can see this kind of spike here from the T-bill. So yeah, but if you all attend the TA class, right, you can see that there's a long upper shadow here, and there's a long upper shadow here. And you can see RSI is near the overbought area. So I would think there will be a pullback soon, probably not a sharp pullback, but probably consolidate a bit and it will hit back to EMA 20. So to me, if you ask me, I'm still a market bull. I don't see market crashing back down like COVID for 20-30% within 1 or 2 weeks time. I still think a 10% correction from time to time is very healthy, right? So for me personally, I have already shot some bullets. If you all are in the Telegram group, you will know that I've added some position on Apple. I've added some position on Net. I've added even position for Lemonade. I've added my position a lot for PLTR, right? So
this guy have been shooting everywhere, basically.
Yeah.
So many bullets.
Yeah, that's why I mentioned that I'm now very low on cash, right? And I really need to control myself from spending more already. I'm going to have a very tight budget for the coming weeks. But yeah, so just to share a bit on how I classify my watch list, right? So this platform, if in the case you guys don't know, it's called TradingView. This is where I do most of my technical analysis, right? So how I classify my portfolio, I will have one watch list which is mainly on indices. So things like S&P 500, NASDAQ, or even VIX, I will put it here to give me a macro kind of perspective. So to look from the top down, you'll see how well is the whole environment is doing, whether is it a red day, is it a green day, things like that. So I have my general watch list, which is most of the companies that I want to look at. So from here, you can see that just now we were mentioning FCS, right? FCS is actually, EMA 20, bro. Yeah. So yeah, this is a general watch list here. And usually I will look through here, and how I do it, I will click on sort, see what is the biggest drop of the day, right? So FCF is actually one of the biggest drop on Friday. Wow, 5%. Probably can shoot again. Wow, Hann itchy already. Yeah, Jumia also. Yeah, Jumia, okay, Jumia maybe not so good, but FCX, quite a good entry, I would say. Okay, so after that, if I have positions, right, I will add them into this list called red list. So whatever is tagged in red, it means I'm holding some positions in it. So yeah, you can see that I don't, even though my watch list is very long, but I try to keep my red list as short as possible. So things that are from HK, they are in mostly on eToro, because I do DCA on them. I don't buy 100 shares one time. So Bitcoin, I have that in different kind of wallets. So these are mainly the US stock I look at. So if you take a glance, most of them are growth stock and tech stock. I cut a lot of my value stocks already because I want to scale my portfolio faster. But yeah, that is me. So do your own due diligence, and yeah, I think you will do fine. So just to share a bit, PLTR, I still think is a very good entry here. This strong boost support. RSI is very low at the bottom. And you can see that, this lower shadow is trying to push the price up. But do realize that this downtrend here, this line, I draw it some time ago here, then I realized, hey, actually it obeys the line very, very interestingly. Yeah. When it's up there, it doesn't fall down. When it breaks through, it has some problem pushing back up, right? So if you want to see another uptrend of PLTR, make sure the price consolidates somewhat here. And probably when it breaks through here is where you can see a further uptrend for PLTR. Yeah, so my portfolio, I would say, has been down quite a bit. Tesla, 800 something to 600 something like that. Yeah, if you have bullets, you can shoot. If not, just hold and chill if you are in for the long term game. Yeah, that's what I want to share. I'm not sure, is there any what do you call it? Any questions from the chat? Any stock tickers that you want us to take a look at? Or Hann, perhaps you have some tickers that you want to share or want to analyze?
Anything from the guys? Actually, I'm looking at Baba as well.
Baba.
Because again, I did my homework. Baba is like the one of the biggest e-commerce companies that are already making money from what they are doing now, and they are adding cloud computing some more into their business, and then yeah, for me it's a very good sign for them to be even making profits on their e-commerce. If I remember correctly, they are already profiting in terms of e-commerce, because if we see, like, even for Zalora, because I'm in the e-commerce industry, so I know, like, they really spend a lot in terms of marketing and promotions, right? So that's why we are seeing perhaps good results, when good gross profit, but then when we minus off the operating expenses, marketing expenses of those companies, then we are seeing huge losses, because they are putting so much. They are still, trying to build, I think, their customer base. So that's why they are putting a lot of effort and money into marketing, and also basically it's, I think, majorly it's marketing expenses. So quite good that Baba can be making money at this point of time. At least it's leading the pack lah, I would say. So I'm looking at Baba as well, and their growth, I think it's still quite strong. It's like 30%, over 30% each and every year for the past at least 3 years. So I think that's a good sign. And I think the cloud computing side of business is just going to grow bigger lah. I think it's kind of like Amazon in US already. They are going. It's definitely going to go. Scale up bigger.
Baba definitely is an Amazon of Asia, though. This I do agree. But I still see that right now is a very good point of entry, I would say. So it's still very cheap from its all-time high. But Baba, I do have some positions here, right? But I don't really add any more positions, because I added somewhere here before the strong fall. So after it falls, I don't really have bullets, so I focus more on other growth stock. But definitely Baba, if it falls to somewhere around 235 is a good entry. Somewhere if it breaks through 250, I will see further upsides. This is my take for Baba. But yeah, definitely Baba in for the long game. If you are in for the long run, right, Baba is something I would say quite consistent in terms of generating profit for you, say at least 10 to 20% per year usually. But this year is something we didn't expect, right? The end financial things like that. But Baba definitely something has been going strong for the past few years. You look at the chart, yeah. Right. Any more things from the floor? If not, I would just close this off very soon. So thanks for all who come today, right? So if in the case where you missed any of our previous session, I just shared this into our Zoom chat, right? So joekwamika.com/wealth. You can access all the previous, I would say, all the previous webinars from interview, from FA sessions, everything from there, right? So in the case where you haven't joined our Telegram group, this is our Telegram channel, right? So just t.me/investment diary, or you can just type investment diary from Telegram and you can access to our chat group. So very thank you for your time, Han Yang, today. And any last word from you?
I think not much. I think the biggest thing that the most important thing that I wanted to point out today is like to everyone is have your own strategy and really just follow on your strategy, and then so you get that confidence. You don't really get all those, because there's really just too much noise in the market. You can't really, you need to be disciplined about the things that you are doing, the companies that you are investing in. Just have faith and have confidence in what you are investing in. And hopefully everyone can do well this year and for all the years to come. Yep.
Yes, very powerful. Fight together, bro. Let's hope this year, after this downfall, we'll go all the way up. Let's scale our portfolio this year. All right. Thank you very much for the time, and thanks for those who attend. All right. So I will try to arrange this kind of interview session from let's say month to month. This is my target. So at least one interview per month. So anyone from the audience, if you feel like you have something to share, or you don't mind to have some info exchange like what I did with Han Yang today, do let me know so we can arrange something for the March session, right? And yeah, do hope to see you guys talk more and exchange more idea in the chat room, and I'll see you again next month. All right, see you guys.
Thanks, guys.